This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, after some 5 chapters dealing with the unincorporated trader, we've got one chapter on employment income, but it's a big chapter. It's a very important one as well, as we'll discuss when we get into our first detailed lecture on this chapter. In this brief introduction, I'm just going to explain to you the lectures that are about to appear that you're going to be working through. We've got a mix of lectures taken from FA 2017, where the issues and principles and rules have not changed. That will be the case for the first 2 lectures that you will be working through on employment income in this chapter. They're both taken from FA 2017. There's one issue that is different that I'll draw your attention to now. Employment income contains not just salaries and wages, of course, of individuals. It's what most people only have. But what they get interested in, very interested in terms of exam questions, is also about the various other benefits that might be provided by an employer to an employee, and also, to a lesser degree, the various expenses. There aren't many of them that might be allowable deductions from that employment income. Now, in the realm of assessable benefits that occupies most of our time, during indeed the 4 lectures that you're going to have on employment income here, most of our time is spent looking at assessable benefits. And in terms of the first lecture, again an FA 2017 lecture, there's just one difference there that I'd like you to note now, and you'll see when you compare the FA 2018 notes that you'll be using in preparation for your exam with the FA 2017 notes that are linked to the lectures that you're about to see. That when dealing with assessable benefits, there is one particular benefit on a list on the page of assessable benefits that no longer exists. It's for childcare vouchers. So what will happen when you work through that first lecture, we'll have deleted the issue about childcare vouchers. Now, don't worry, it's not that in the UK we've got nasty towards children anymore. It is just that the system has changed. So the childcare voucher system has gone. It has been replaced with a new system, but thankfully, so far as we're concerned for our exam, it's not in your syllabus, so we don't have to worry about it. So as you go through that, the only thing that you will notice after about, I think it's about 34 minutes of that lecture, there'll be a little jump there where we have removed the lecture pertaining to childcare vouchers. Why? It's history and it is not now examinable, and its replacement is not examinable. Other than that, everything, all of the rules are exactly the same. That is equally true with our second lecture on employment income, where the only thing that will be different is that in the lectures you'll be watching, you'll see references and we'll be talking about 2017-18 tax year. And now in your FA 2018 notes, it is, of course, the 2018-19 tax year. But how we work and determine assessable benefit is exactly the same. So again, you'll be working through those 2. In the third lecture, that will be an entirely new lecture, which deals with the one big area that basically changes every year. Not so much in terms of principles, but in terms of the numbers that we have to deal with. And there's been a few changes in the techniques as well, which means we need a new lecture. And what it deals with is probably the most likely benefit that any employee who gets any benefits at all from their employer is likely to have. And that, of course, is a car benefit, the company car, as we might call it there. And the way in which we compute car benefits for 2018-19 compared to 17-18 has changed. Not to say in principle, but in terms of the mechanics of the process, the numbers that we use, there are significant differences. So we've recorded, therefore, a new lecture to take you through that. After dealing with both the car and, of course, the fuel that might also be provided for that car by your employer, we then look at, well, lesser areas, but it comes up from time to time. What about if, sadly, you didn't get a company car? You've got to drive around in a company van. You've made it indeed there. But it's a company van rather than a company car. Again, there are set levels of assessable benefit, whether it's just the van or the van plus fuel provided for private use of the individual employee. where set levels are used, set benefits. It's a very simple process, apart from you've got to learn some numbers there, just 2 of them, where those numbers have changed. So again, I'll take you through that with that 3rd lecture. And again, those particular areas, slight change in terms of vans, commercial vehicles, basically, that we deal with. A couple of other little areas there which have changed. Other than that, we get to your last lecture, lecture 4 in this particular chapter, where the main area we look at is that of the so-called area of beneficial loans. Again, the system by which we deal with them has not changed, and all that will happen is in the examples we'll be dealing with the 2017-18 tax year rather than the current 18-19 tax year. Hence, the FA 17 lectures and the accompanying notes may be used to work through those lectures, but simply that although you employ the same technique, you'll be doing it for the 2018-19 tax year. Okay, so a long chapter therefore. FA 2017 notes and lectures will be used for the 1st and 2nd lecture, and then the 4th and final lecture. Lecture 3, dealing basically with car benefits as the main issue there. That's a new lecture, and will of course use the FA 2018 notes. I look forward to seeing you in the first detailed chapter.